Hello traders everywhere, Adam Hewison here, president of INO.com and co-creator of MarketClub with your video market update for Monday the 25th of February. I have two major concerns today. One of course is the sequester that's coming up on March 1st and is rapidly approaching, and neither sides, the Republicans or the Democrats, seem intent on any kind of compromise in that situation. Not good for America and not good for the markets, I'm afraid. My second major concern is Italy. Yes, Italy, you heard that right. I'm not convinced that Italy has gotten over all the problems that were helping the financial or hurting the financial situation back a year or two ago. Italy is the third most indebted nation in the world. That falls right after the US and Japan. Now, I still think the wild card here is going to be Silvio Berlusconi, who just looks like he's going to win a Senate seat majority there. And that's going to be a disaster, I think, for Italy, as well as some other things that are going to happen there. So that could be the dog that wags the tail literally around the world. So we have to watch that very carefully. We're looking at a symbol called EWI. That's the index for the stock index in Italy. So let's get started right away. Let's start with the S&P 500. And of course, this is a very positive, still a positive indicator. Trend-wise, it looks like the trend is up. We've got our monthly and weekly in a positive mode. Only the dailies in a negative mode. And as I said last week, the key here is going to be this line in the sand right here. This is the 1495. That's the key in our estimation. If we go below this area, then we should be out of the market because this will turn our green weekly triangle red, meaning a sidelines position for intermediate term traders. Okay, longer term traders can stay positive as long as the green trade triangle is intact. So let's just clear the screen and go to our next couple of markets. Got a lot to cover today when we look at some stocks on the move and also a couple of other things too. So I want to go skip the NASDAQ, and which is basically negative and not negative, but on the sidelines. Basically, let's take a look at crude. The only thing on crude that's positive right now is the monthly trade triangle. And as you can see, we sort of pull back, and if we put our Fibonacci numbers in here, which is easy to do with MarketClub, just click here and pull down to the lows. And you can see we've come right back in to the 50% level, which is right here. I'll just pull that out like here. So we've sort of been dancing along that 50% line. And also we've got a little bit of a positive divergence here. Not so noticeable, but certainly we're very oversold. So I would expect to see more sideways action, possibly another push down, even down to the 91.50 area, and then some sort of recovery from there. But I want to see this and the daily and the weekly go positive before I get excited about buying this market again. I don't like to just buy it because it looks like it's cheap. That's not the way I like to trade. So let's just clear the screen off and go to our next market, which is going to be gold. Gold has had a little bit of a recovery here. We've got a daily green indicating you should be out of this market if you're following our program, which we do with the World Cup portfolio. Let me explain how that goes. I put the weekly in here and the daily. So here's our last signal on the weekly, which was our initial entry point at 1653. The market's currently at 1590. Our signal was 1586.93. So I'm just going to do some rough math for you. So if we take this number right here and this number here, we just subtract it. I'm going to take 14. I'm going to call that 57. Is that right? No, it's 67. Excuse me, I'm shortchanging myself. So this should be 67. That's actually $6,700 on one contract of gold futures. And again, this is a nice, really nice trade. So that's went into our covers of the World Cup portfolio. If you're not a World Cup member, or a member of MarketClub, I should say, you can find the signals every day in this portfolio, and I'll show you exactly where they are. We'll just go simply to the homepage of MarketClub, and you'll see them right here. Global Strategy, World Perfect ETF portfolio, and the World Cup. So if you click here, it'll show you our positions. And there's the gold, short from 1653. So we want to be out of this market. So that's the real cool thing. So it's very simple as to how this works. So anyway, we'll be taking a look at this market and the portfolios in the future trips to our market. So let's just go back to our portfolio and just click right here. It just takes you right back, and let's take a look at some other markets after the gold. So here we are. Here's our market. Let's say gold. Let's go look at the euro. The euro is somewhat mixed. The weekly's down, the daily's up. It's kind of all over the board because of this Berlusconi thing today. I don't think it's looking that great. Certainly with the intermediate term trend down. I also think that as long as the monthly is up, you have to say, well, it's looking pretty good. But it looks like, as we said last week, if you just look at this from a technical viewpoint, it looks like it's making that sort of really kind of turning over, and that's the formation. So if you take from the highs here, 137, down to, let's say, the 133 level, that's 4. So you could say it's maybe the 129, 130 level, which kind of makes sense. Technically, you just need to be careful about this market right now because of the really chaotic nature we're seeing in Italy. So let's just go to our next market. The next market we're looking at is, in fact, the index from Italy. It's the EWI index. Look at how this market is traded just today. Yes, that's right. Look at the highs right here and the lows. I mean, that's pretty amazing. That's the biggest move. Look back. Look at all these moves. They're very small, and suddenly you have wow. Well, as it started out in Italy, the stock market was very strong. It was up almost plus 4%. And it's now down on the day with the advent of Berlusconi. Berlusconi is not going to be good for Italy. He's not going to be good for the country. And he's not going to be good probably for the world. So I think that's what we have to look at right now. Italy is a huge indebted country, and they have no way of paying this back. It's going to come back and bite all of us, I think, on the butt. So we have to be very careful. This is the index to watch. And I would say if we see this market go below 1180, and it's 1257 right now. Actually, we could probably say if it goes below, change that. Let's call it 1220. If it goes below 1220, which is another 37 cents, then this will probably turn red on the downside, a little red triangle there, and that will not be a good sign. So I think you want to be very careful about that. So let's just clear the screen, go to our next market, and that's going to be this is going to be a stock, actually the currency, the British pound, under a lot of pressure. We've had a super trade in this market. You can see we've been short pretty much right across the board, the monthly, the weekly, and the daily, still under pressure. It got downgraded. Great Britain got downgraded last week by Moody's, and of course that only accelerated the downside. But you can see how beautiful this trend has been, really on the downside. So we can scope this in a little bit further, and you can see, let me go the other way, you can get an idea. We've taken out some very serious support levels around the 153 level. Now the next level we're looking at, if we scope this out even further, you can see is going to be about the 144 level, around this level here. And if we go even further, let's just give you an idea of what technically this could do. If we just draw a support line right across here, right around there, we can go from this level, let's say, I want to call it 154 up to 162, that's 8. Take that 8 from here, from 54, takes you to 46, and I think you could get down to 44, which is right these levels right here. So I think that would be the first target, which is a nice profit from current levels. We may see a little pop on the upside, but I don't think we'll see this market go through the 53 level, 52 level, somewhere like that. I think it's going to be like a brick wall on sterling for the market. A lot of problems over in the UK with unemployment and recession, and it doesn't look like it's going to clear up anytime soon. So I think you want to watch that very carefully. So let's just clear that screen off. So sterling, we're negative on. All of our trade triangles are red, indicating lower prices, and I think that's what to look for. So let's go to our next market. This is Amgen. This is a nice stock mover today. We got a long-term chart on Amgen. You can see if we scope this really in closely over the last 6 months, You can see there's a new high in this market. Let's take this off. We don't need this. But there's a new high. If we close over 91 today, it would look as though we want to go higher. So I would say we could see this market go up to possibly 100. But I think that's going to be a big number for this market to get through with the current technical formation that we have. But this is a new all-time high. Looks very, very good. The trend is your friend. We're up some almost 5% on the day in AMGN, which is a huge move for a stock like this. And the symbol is AMGN. You may want to put it in your portfolio and watch that. So let's go to our next market. This is SWN, Southwest Energy. And we have a weekly and a monthly red. Now look at the market rallied. It's back up to resistance. I would say you could probably sell this market because the trend clearly is down and you're selling at better levels than the trend indicates. So you could sell it and put a stop over 35 and forget it. So you got about $1 risk right here. So see how that works out. You may want to follow that in your portfolio. Next market is F5 Networks, the symbol FFIV, and that's under pressure. And the only thing we have going for it right now is the monthly, but that can change. I say if we go below the 91 level, which is about $5 lower, about 5% lower than we are right now, that would turn this negative. So I think for the most part, this is going to be more of a choppy range. Really stand aside here. When you get these mixed signals, the monthly and the weekly diverging from there, just stand aside. Really no reason to get involved with that. Now the next market is going to be Chesapeake Energy. Now this is a market that you may want to seriously look at in terms of being short, because you have all the monthlies, weeklies, and dailies all negative, minus 100. Big down day today. I would say probably if you have any kind of rally here, you maybe want to sell it. It should have really heavy resistance around 20, and certainly if it goes over 21, you'd be out. So that's something we're looking at, but we've covered a lot of markets today. There's a lot going on, but I am concerned about the sequester that comes on March 1st. Also, I'm concerned about Italy. That's the wild card in this thing, and I think you want to watch that ETF symbol very carefully, EWI. Hey, I'm Adam Hewison from Market Club. I'll be back tomorrow, same time. Have a great trading day.